What's up everyone, welcome to the channel. In this video you'll find a lot of free education. Make sure to subscribe because every week I share some free education here on my YouTube channel. Now, as you know, I'm mainly a smart money trader. My strategies are based on smart money, but we need to talk about it for a second. Smart money has great concepts, but at the same time, as you know, 90% of traders are still losing money. And you might wonder why they're still losing money. Of course, psychology has a role in this, but also I will say that smart money by itself is not something that makes you profitable. The concepts are great, but by itself, they don't make you profitable. Actually, constructing and developing a system that works and has an edge on the market is what really makes the difference. I hope that you can really find the informations that you need in order to become successful just by looking at my free channel, but at the same time, in the description below, you can find the links to actually join my course. My course, both the 1.0 and also the 2.0, is included with any membership from the monthly all the way to the lifetime, or also there is the option to have some one-on-one lessons. So make sure to check my website and then I'll see you on the video.
All right, about the Asian range, are Asian range order blocks valid? Do they work?
Yes, they are, but I prefer manipulation. Now, one good example of...
It's actually on gold. There's the order block you mentioned in gold. That was an Asian range order block.
Just wanted to show you a good example from last week. I believe this one. Yeah, this one right here. Well, no, this is not an order block inside the Asian range at all. So, no, never mind. No, never mind. Yeah, they do work, but the trend needs to be with you. So basically, let's say this is the Asian range. Here, there is an order block.
Yeah.
If on higher time frames the overall trend is down, and only if this order block manipulates and then breaks, which means that it is a strong order block, and only if there is confirmation on lower time frames once we come here, then I might consider this trade, because my best trades are outside the Asian range with the manipulation. Now, in few cases, this can work. Now, I give you one thing that I haven't told anyone yet, because I need to make some new lessons about it, but is that if the opening price of the day, and now I will tell you how to find it, is aligned with this area, then it can be a really good trade also if the Asian range, even if the order block is inside the Asian range. So this might be the opening price. Now, how do you find it?
Could you just please explain it to me, because I'm kind of confused.
Yeah, what is the opening price?
All right.
The opening price is the price at which we are at 5 a.m. in the morning with this time zone. So it's +1, 5 a.m. in the morning. It's here, let's see, 5, perfect, this candle.
Yeah.
So that's the opening price of the day.
All right.
5 a.m. candle, opening price. Now, if, let's say, the opening price can be used for confidence for our trade. So let's say, I'll just do a different example because this one doesn't apply to this. So if we create an order block, which is around the opening price, so close to the opening price, we create a strong order block. We go down, we come back to the order block. The order block corresponds to the opening price. And we also have confirmation, then that's a really good trade that I might consider. I would take. Opening price just is more confidence. because opening price.
Is it the order block must be like aligned with the opening price?
Yeah, not perfectly, but around the opening price. Yeah.
Around the opening price. All right.
Now, why? Because the opening price dictates the bias of the day, helps with the bias of the day. You have the Asian range, which already helps, but the opening price basically tells you that here we open price, and then there are some options for the day. We can have manipulation to the upside, so Asian range manipulation, and a bearish day.
Yeah.
Retracement at the end, or opening price, manipulation of the Asian range, bullish day.
Yeah, no new character.
Yeah, or the other options, which are pretty obvious. Opening price, push to the downside, retracement to opening price, continuation. So these are the options that are a little bit harder to trade because this order block is the close to the opening price order block, which is inside the Asian range. Now, for these two, so this option and this option, we have the Asian range manipulation. So basically right here, this is the let's say this one is this option that is happening here. Let me show it to you. So we have opening price, as I said earlier, at 5 right here.
Yeah, all right.
Manipulation to the upside, also Asian range manipulation, so both things. Then what do we have? Push to the downside, change of Carter, retracement, supply, or
but enter from this trade, right?
Yeah.
Yeah. Okay.
Push to the downside.
Yeah, good.
Keep going.
Good.
You know, so this is one option. Manipulation, opening price, manipulation, continuation.
So, the opening price is like extra confirmation, right?
Extra confluence with your area. Yeah. In this case, we just use it to see, okay, price. You need to remember the figures that I drew earlier. In this case, we have opening price, manipulation, push to the downside, retest, continuation. Now,
but I have a question, Edward.
Yeah.
What if the opening price was like not near the order block, was like a bit far from it?
Well, here it didn't matter because here we had, because this was a manipulation setup. So here the opening price, we just used it for understanding the figure. So this was the figure basically. Now, the opening price confluence for the order block is used only when this is the case, when we go to the downside, retest and continue, because here this order block must be close to the opening price. So this really helps in the continuation cases, not the
continuation cases.
Yeah.
Can you just please like show me in one example?
Let's see if I find it. No, not this. Well, no, this is manipulation because we open, manipulate, continue to the upside. Open, manipulate, continue to the downside. Open, manipulate, continue to the upside.
Yeah, all about manipulation. This one here.
This one.
Yeah.
So we open, we don't manipulate to the upside, we just go to the downside. It must be aligned with higher time frames, otherwise it's a little bit harder. Here we have 5 a.m. candle. Perfect. Okay, so what happens? The day opens. What is the figure? Figure is continuation figure. We open, we go to the downside, retest, continue to the downside again. Now, this happens right here. 1 second. I want to see higher time frames just for at least the 30 minutes, just to check it out. So something happens. Well, yeah, we kind of have a break structure here to the downside.
Yeah.
However, it's not that clear that we're bearish. But anyway, we open the day, opening price, push to the downside. Now, you might be thinking, okay, but where do I want to enter? Because there is this order block, this order block, this order block, and so on.
Yeah.
We enter close to the opening price. So we find an order block that here, perfect.
Yeah.
And we enter from here, basically. Let's see on the 1 minute if you can refine it. And refine it to this last up candle.
Yeah.
And that's perfect. Also strong order block because it manipulates here. We go above it. So
Yeah.
this is perfect.
Structure.
And breaks. So here, this figure, the opening price helps you a lot because the overall setup is basically coincides to the opening price. We push to the downside. This is not a manipulation setup. This is a continuation setup. We come back,
setup, yeah.
and then we continue. And then I think we go for external liquidity. Yeah, right here. And this should be the target.
Where would you enter from? Like with low time frame confirmation?
The 1 minute. If you don't want to take a risky entry here, you have change of Carter right after, right here, and this whole order block right here.
Yeah.
And I might enter here. Now let's say that you enter from this lower order block here. You also, maybe it's not that perfect of an entry, but you have a very good entry here.
You would put your stop loss above the order book, right?
Yeah.
Yeah. Okay, great.
Perfect. So